Hello and welcome everyone to this week's COT review. I'm Thomas from COTbase.com. Today we're going to be analyzing the 8th Commitments of Traders Report of 2020. And as we always do, we shall start the analysis by looking at the largest changes in commercials positions. Now, here you can see we have wheat on top of our list with a 21% change in commercials positions. It is a much greater change than average. You can see that on the charts over here. It is, of course, a bearish COT change signal suggesting we may see some decline early next week. If we move on to the 5 years chart, you can see that we are getting closer and closer to bearish extreme levels. We have seen much greater bearish extremes in the past, like the one I'm showing to you from August of 2018. There's another beautiful example from July of 2017. So we are not at those extremes yet. Nevertheless, it is definitely leaning towards the bearish side of the market. So we can state that basically both of our major COT signals are pointing downwards. Moving on to the New Zealand dollar, which is our next market, we have a 19% change over there in commercials positions. A much greater change size than usual. We're talking about a currency here. It is bullish. We've seen the New Zealand dollar declining for quite some time now, and this bullish COT change signal suggests we may actually see some rebound happening over here. Now if we jump to the 5 years chart, you may remember that we had these bullish COT extremes in October of last year. I talked about this in the review. You can see how well the market reacted to this extreme signal, but now we are back in a lower price territory. So of course, if we'd see such a bullish extreme once again, then of course we'd be more inclined towards expecting a rally. We are not at those levels yet. So that's that for the New Zealand dollar. The next market would be the Minneapolis Wheat, but since we talked about the wheat, the Chicago wheat, then I'd rather just go over to the dollar index to show you something new. We have a 15% change over there in commercials positions, a bit larger than average change size, again indicating some weakness for early next week. If we move on to the 5 years chart, you may see that we are more or less in between the two extremes, maybe a little bit closer to bullish extreme levels. We had that bullish extreme in December of last year. We've seen much greater bullish extremes in the past. Nevertheless, this was an extreme. We're moving away from those levels, of course, and we're not surprised to see that as the dollar index is gaining strength in the market. Moving on to large speculator COT Extreme, we've got gold on top of our list with an all-time COT Extreme in large speculators positions. It's an all-time COT Extreme in commercials as well. Now, of course, this is a quite obvious signal, but caution is advised. You may see that we've been witnessing bearish extreme levels since the fall of last year. And you can see that the market was able to continue its rally. So this basically means that we should not be surprised if the market actually is able to head higher. But warning signals are already visible from the COT report. Stress levels are building up, and commercial participants are actually pretty short right now. So that's something that you might want to look at. Metals complex, something for our subscribers. Soybean meal would be our next market with 206 report extreme in large speculators. You can see that this is a bullish COT extreme signal, and that is of course suggesting we may see some rise happening in soybean meal in the next couple of weeks, month. But don't forget, we've been in these bullish extreme territories for quite some time without any reaction from the market. So that's something that you should be cautious about. And last but not least, let's have a look at the sugar market, where we have 155 report extreme in large speculators, 157 report extreme in commercials, and 174 report extreme in small speculators. Now, if you look back at the chart, this 5 year chart, you can see that back here in September of 2016, we had something similar that coincided with this top. So this may actually be a very exciting and interesting moment in time here in sugar market, suggesting, or at least this extreme suggests, that we may easily see some weakness happening in this market in the next couple of weeks and month ahead of us. So that was all for this COT review, but of course, don't forget you can always do a more in-depth and detailed COT analysis if you visit cotbase.com. You have the option to look at newer COT report types, other data types, analyze all the data sets that we have available for you. You can see over here. You can, of course, dig deeper in the COT change analysis, looking at multiple report changes on any defined look back period. And of course, we have an extreme analysis that goes deeper by looking at the COT index, the move index. We also have the long-term trend indicator and some volume and open interest analysis as well. So a lot to do here. I hope you enjoyed my review. I thank you for being with me, and I wish you a pleasant weekend. Take care. Goodbye.